Why is the bond market defying all expectations?
Well, essentially it comes down to directives from Beijing to let these corporates have a bit of leeway. What we've seen so far this year is about $4.5 billion of debt that essentially companies onshore haven't been able to pay back. Now, that is within a $4.5 trillion onshore corporate bond market, and it actually represents a drop of 20% from the same time last year. So far less and far fewer defaults, as you said. And it does come from these signals from Beijing, or follows these signals from Beijing, that again, there should be a bit more leeway given to some of these lenders so that they can restructure debt during what is, of course, an historic economic slump here. So swapping old notes for new, delaying payments, cancelling early redemptions. You've seen the securities regulator, the Shanghai Stock Exchange, even the interbank market regulator, all leaning on investors or putting together mechanisms to give borrowers an off-ramp. And of course, it does to some extent mirror what we've been seeing happening in other countries, but it also marks something of a U-turn for China from recent years when the emphasis had shifted towards bondholder protection and allowing defaults. And now, as a consequence of this economic pain that's being felt, they are having to walk that back to some extent. Analysts saying it is a reminder that ultimately, particularly in this current environment, China's bond market, investors, essentially do not have the upper hand at this point.
Now, Tom, we've got China's economy shifting up a gear, or at least that's the anecdotal evidence anyway. Airline industry does at the moment face huge challenges. It is struggling. How much of this is also down to a fear of travel? But I've got to say that we've got Credit Suisse upgrading at least one airline, China Southern.
That's right. In fact, Jefferies have also upgraded China's airlines as well. They say that they saw a bottoming out of prices in March, and that they are going to benefit the airlines here from, of course, this tumbling oil price, because Chinese airlines don't hedge against oil. So the analysts' views seem to be turning a little bit more positive. But we've heard from IATA, of course, the International Air Transport Association, saying that they have seen that travel in China has picked up when it comes to business travel, for example. But what they're saying, crucially, is there hasn't been a resurgence in the tourism market. Again, that is according to the International Air Transport Association. So totally, what you're looking at now, the broad picture is the demand for flights within China are stuck at about 45% of pre-outbreak levels. And of course, that is a concern for the airlines, because it suggests, at least according to IATA economists, that there won't be a quick rebound from the virus. People are still anxious about traveling. And in fact, IATA did their own survey, and about 40% of people who replied said that they would wait about 6 months or more to fly again. And even when people do start flying again, airlines are likely to have to put in place options to try and reduce those concerns, whether it's face masks or helping out with airline health checks or taking out the middle row in seats. But all of that, of course, comes with a cost. But you're right to point out that analysts, just in the last few hours, from the likes of Jefferies and others, have suggested that maybe there's a bit of upside for these airlines, largely down to the oil price, it seems.